Hello, my dear students. Hope you guys are all doing good. Hope you're all perfectly fine. So, from this session, we'll be starting to discuss the technicalities of the standards on audit. In each session, we'll be talking about a different standard on audit. So, in this session, we'll be starting with SA 240. I will start explaining the technicalities and the complete standard of SA 250, which is talking about consideration of laws and regulations in an audit of the financial statements. Like if you remember in the previous session, I have told you that when I say I am teaching you the chapter standards on audit, there are some 10 standards which we need to have a dedicated discussion in this chapter. So there are some 10 standards which are not covered anywhere else in any other chapter. Those 10 standards we are going to have a dedicated discussion in this chapter called standards on audit. And out of the 10 standards also, today I will begin explanation from SA 250. See, one small caution before I start explaining the provisions of that SA 250, or a general instruction I would like to give you here. See, if you want to understand any standard in a correct perspective, any standard on audit, if you want to understand in a correct perspective, if you want to get the conceptual clarity, the most important thing is you need to understand with what objective the standard has been given. So if we want to get good conceptual clarity of any standard on audit, the most important thing which we need to understand is what is the objective, what is the purpose with which the standard has been given. Like you might have seen in the accounting standards, each and every accounting standard will have its own dedicated purpose. Like when you see AS2 talks about exclusively on valuation of inventories. AS3 exclusively gives the guidance on preparation of cash flow statements. So like this, every accounting standard will have its dedicated objective. The same logic applies even in the case of standards on auditing also. Each and every standard on audit will be given with some specific objective. There will be a dedicated purpose why any standard on audit has been given. If you understand what is the objective with which the standard on auditing has been issued, what does that standard deal with, what is the main purpose of that standard, if you get that objective, then the conceptual clarity will be very higher. If you are not able to understand the objective or the purpose with which the standard has been given, or no matter how many times you read the content of the standard, you somewhere there will always be gaps left. So if you want your knowledge on the standards to be comprehensive, to be complete, we should always, first thing which we need to do is we should always become clear with what is the objective of the standard, what is the purpose with which the standard has been given. So now, as I have told, we will be starting today with SA 250. Let us try to first understand with what objective SA 250 has been given, what guidance this standard is trying to provide, what exactly we are going to learn in this standard on audit SA 250. So when we look at the title of the standard, when you look at the title of the standard, if you pay attention to the title itself, the objective of the standard becomes very clear. So if you see the title of essay 250, they say that the title of essay 250 is consideration of laws and regulations. Consideration of laws and regulations in an audit of financial statements. So one thing is very clear from this essay 250, it is going to talk something about laws and regulations. It is talking about something relating to laws and regulations. So as an auditor, whenever you are conducting audit of some company, as a part of audit of your financial statements, what will the auditor consider relating to laws and regulation? What will be auditor's responsibilities, you can say, or what things auditor will consider, what is auditor's responsibility relating to laws and regulations while conducting the audit of financial statements of the entity. So if I put it in simple terms, SA 250 is going to talk about auditor's responsibilities relating to laws and regulations. What auditor is supposed to do, what will be auditor's responsibilities, what will be auditor's duties relating to laws and regulations. So assume that I am a practicing chartered accountant. I have been appointed as auditor of the company. Assume, for example, Reliance Industries Limited. I'm a practicing chartered accountant. I'm an auditor. I'm conducting audit of this company. This is my client company, Reliance Industries Limited. I'm conducting audit. Now, while conducting audit of my client company, what will be my responsibilities relating to laws and regulations. See, there is no doubt when I am conducting audit of the financial statements of Reliance Industries Limited, I will definitely verify their books of accounts. I will definitely verify their financial statements. But if you remember, if you go back to the discussion, nature, objective and scope of audit, in that we have seen even auditor needs to take care of statutory compliances also. He need to verify the statutory compliances also. So this standard is talking about what will be auditor's responsibilities relating to laws and regulations while conducting an audit of the financial statements of the client company. That is what the standard is talking about. So one thing is very clear, this standard is going to talk about laws and regulations. But now I have a doubt here. Is this standard talking about those laws and regulations which will be auditor's responsibility to comply, or this particular standard is talking about those laws and regulations which the management has to comply? Which laws and regulations they are referring to? My doubt is, see, one thing is very clear from the title of the standard. This standard is going to talk about what will be auditor's responsibilities relating to laws and regulations while conducting an audit of the financial statements. Understood. But I am creating a doubt for you. I am asking a question. Are they talking about those laws and regulations which will be the responsibility of auditor to fulfill, or are they talking about those laws and regulations which the client's management should fulfill? So which laws and regulations they are talking about? Or if I put it in other way, are they talking about those laws and regulations which are applicable to your client company or which are applicable to your auditor? Which laws and regulations they are talking about? They are talking about those laws and regulations which are applicable for my client company. They are talking about auditor's responsibilities relating to those laws and regulations which are applicable for your client's entity. Which means, so as I have told, in the given case, I am conducting audit of Reliance Industries Limited. When I say Reliance Industries Limited, its legal form is company. So depending on the business of the company, depending on legal form of the company, this company is required to comply with so many laws and regulations. Reliance, my client company, is required to comply with so many laws and regulations. For example, say if I have to tell you, they need to comply with Companies Act. Since they are a company incorporated under Companies Act, they need to comply with provisions of Companies Act. Since they are into manufacturing industry, they need to comply with Factories Act. They will run various factories. They need to comply with the Factories Act. Since they have so many number of employees, they need to comply with employee benefit related laws and regulations. Like they have to comply with PF Act, Gratuity Act, Bonus Act, that they need to comply with. And also they need to comply with Child Labor Act. Since they are into manufacturing entity, they need to comply with pollution related laws and regulations. Yes or no? So like this, if I am conducting audit of Reliance Industries Limited, my client company is required to comply with these many number of laws and regulations. The list is not yet over. Depending on the business, so many laws will come into picture here. Or if you take, for example, if I am conducting audit of some client company which is there into restaurant industry, assume I am conducting audit of Taj Hotels. So now depending upon the legal form and business of Taj Hotels, this client company is also required to comply with so many laws and regulations. Like for example, since Taj Hotels is also a company, they required to comply with Companies Act. Since they are into food industry, they need to comply with food related laws and regulations. They need to comply with for FCI norms. They need to comply with FSSAI norms. So like this, if I am conducting audit of IT company, depending upon their legal form, depending on their business, they need to comply with various laws and regulations. So this standard SA 250 is talking about those laws and regulations which your client company has to comply with. So depending upon nature of your client company, depending upon your business of your client company, depending upon the legal form of your client company, there will be numerous laws which your client has to comply with. Regarding those laws and regulations which your client has to comply with, what will be your responsibilities as an auditor? That's what the standard is talking about. So I am setting out the objective of the standard, why this standard has been given. If you become clear with that, the concept, whatever we understand, that will become very, very simple. Hope you are able to understand it, what I am trying to say. So SA 250 is talking about auditors' responsibilities relating to laws and regulations, which who has to comply with, which your client has to comply with, which are applicable for your client company. Regarding those laws and regulations, what will be auditors' responsibilities? while conducting audit of financial statements. If I am conducting audit of Reliance Industries Limited regarding this various laws which are applicable for my client company, what I am supposed to do? If I am conducting audit of Taj Hotels, whatever laws which are applicable for my client company regarding them, what are my responsibilities? If I am conducting audit of Infosys company, whatever laws and regulations that are applicable for Infosys company regarding that, what will be my responsibilities? Understood? Everybody clear with the objective? Come on, repeat one more time. So SA 250 talks about auditor's responsibilities relating to those laws and regulations which are applicable for your client company while conducting audit of that financial statements. Okay, so we have set the objective of the standard. So what is the purpose of the standard? We got to know about it. Now let us go into the technicalities of the standard. I will ask you one primary question. It is whose primary responsibility to ensure the compliances with the laws and regulations? Or if I put it in other way around, it is whose primary responsibility to prevent the non-compliances? Who is primarily responsible to make sure that no laws are violated, each and every law and regulation has been complied with while running the business? It is whose primary responsibility? Auditor or management? The primary responsibility to prevent the non-compliances, to stop the non-compliances from happening, that primary responsibility to prevent non-compliances is with auditor or management? Management only. See, you are not appointing the auditor exclusively to stop the non-compliance. Can you expect the auditor to prevent non-compliance? No. Is that your responsibility? No. To prevent non-compliances, to make sure that no laws are violated, that primary responsibility rests with whom? Management. It is whose primary responsibility to detect the non-compliances? In case, assume if non-compliance has already taken place, it is whose responsibility to detect it, to find out that non-compliances? It is whose responsibility? Management or auditor? Once again, management only. Once again, management only. When I say management along with those charged with governance. Understood? So the point which I want to make sure here is the primary responsibility, the first and foremost responsibility to prevent the non-compliances and also to detect the non-compliances after they have taken place. That primary responsibility always rests with management. Primarily management is responsible for prevention of non-compliances. At the same time, to detect the non-compliance also, the primary responsibility will always be on the head of management and those charged with governance. Auditor's main responsibility is not to prevent non-compliance. You cannot expect the auditor to stop non-compliances. You cannot even expect the auditor to detect all non-compliances. Why? Because it is not his main objective. Nowhere did I tell in the earlier chapters auditor's main responsibility is to find out non-compliances with the laws and regulations. Did I tell you anywhere? Or did I anywhere mention auditor will be primary responsible for preventing non-compliances? Did I say it anywhere? No. So primary responsibility always rests with to prevent and also to detect. That primary responsibility always and always rests with management. So now what about auditor's responsibility, sir? What about auditor's responsibility? You are telling the primary responsibility will always be there with management for both prevention and detection. Then what will be auditor's responsibility? If the auditor is unable to detect non-compliances, will he always be spared? You are telling management is primarily responsible. Now what about auditor's responsibilities? So if I am conducting audit of Reliance Industries Limited, I have done the audit, but I'm not able to find out some non-compliances. Assume Reliance Industries Limited did some non-compliance. They did not follow some law or regulation applicable for them. But even after doing the audit also, I'm not able to find it out. I did not detect it. I did audit, but I'm unable to detect that the company has made some non-compliance. Will the auditor be punished for that? Will the auditor be punished? Will he not be punished? That means he will always be spared. This kind of question somewhere we have come across now. So no. So what we understood what is management's responsibility. The primary responsibility to prevent non-compliances and to detect the non-compliances. Both are going to be there with the management. But what about auditor's responsibility, sir? Will he be made responsible or will he not be made responsible, sir? What auditor has to do? What functions he has to fulfill regarding the laws and regulations? We understood management responsibility. It is very clear. But what is auditor's responsibility? What auditor is supposed to do regarding those laws and regulations which are applicable for my client company? That is what this standard is talking about. That is what this particular standard is talking about. Now, I think objective is more clear. So primary responsibility to prevent non-compliances and to detect the non-compliances is going to be there with the management. But what is auditor's responsibility? What auditor should do? What auditor should not do? What consequences he has to face? All that will be discussed in this standard SA 250. Understood, everybody? So one thing we have understood, the primary responsibility is with management. Guys, when it comes to standards on auditing, I have charts for you. In this chapter, whatever 10 standards we are going to discuss, for all these 10 standards, I have the charts readily available here. These charts also will be shared with you in the app. Also, they are there. You can easily download them. So with the help of the standard, with the help of these charts, we will try to do the discussion in a quick manner and also in a easily understandable manner. So first, let us try to go through with the help of charts. So responsibility regarding laws and regulations. As I have mentioned, management's responsibility. What is management responsibility? The management responsibility is primary. Management is primary responsibility. The primary responsibility to prevent non-compliances and also to detect the non-compliances. The primary responsibility is always with whom? Management of the entity. Now, what about auditor's responsibility? The standard says that for the purpose of deciding what auditor is supposed to do regarding laws and regulations which are applicable for the client company, this standard SA 250 divided the laws and regulations applicable for the client company into two categories to determine what will be auditor's responsibilities relating to laws and regulations while conducting the audit. Management responsibility we have understood. But to know what auditor is supposed to do regarding laws and regulations, this standard SA 250 to decide what will be auditor's responsibilities, the laws and regulations are divided into two categories, type 1 laws and regulations and type 2 laws and regulations. For what purpose they have divided into two categories? To determine what are auditors' responsibilities regarding laws and regulations applicable to the client. The SA 250 is dividing laws and regulations into two categories, type 1 laws and regulations, type 2 laws and regulations. Sir, which laws and regulations will fall under type 1 category? Which laws and regulations will fall under type 2 category? Let us try to have an understanding. So if you come back to the charts here, type 1, type 2. See here, for auditors' responsibilities, laws and regulations are divided into two categories, type 1, type 2. Sir, which laws and regulations will fall under type 1? Let us see what they say. Those laws and regulations which have a direct effect, which have what? Which have a direct effect on determination of amounts and disclosures in the financial statements. So those laws and regulations which will have a direct effect on determining amounts and disclosures in the financial statements, they will fall under type 1. Whereas which laws will fall under type 2? Those laws and regulations which do not have a direct effect on determination of amounts and disclosures in the financial statements, but whose compliance is required either to avoid the penalties or which are fundamental to continue the business. So let me try to explain it slowly here. For the purpose of auditor's responsibilities, laws and regulations are divided into two categories, type 1, type 2. Under type 1 laws and regulations, those laws and regulations which have a direct effect on what? Determination of amounts and disclosures in the financial statements. Those laws which are going to have a direct effect on determining amounts and disclosures in the financial statements. Whereas type 2 laws and regulations, they do not have any direct effect on determining amounts and disclosures in the financial statements, but however, their compliance is required. Even though these laws and regulations do not have any direct effect on the determination of amounts and disclosures in the financial statements, but compliance is required. You cannot ignore them. You have to comply with them, but compliance is required. For what purpose? Either to avoid penalties. That means if you don't, even though they don't have any direct effect on determining amounts and disclosures, but if you don't comply with them, what will happen is you have to face penalty. Or sometimes compliance is very much fundamental to continue the business. It is very much basic. If you want to continue the business, you have to comply with some laws, even though they don't have a direct effect on determination of amounts and disclosures, but if you don't comply with them, you have to close down your business. So that's what even they try to say here in the chart. Type 1, those laws and regulations which have a direct effect. They are going to directly impact your amounts and disclosures in the financial statements. Whereas type 2 laws and regulations, these laws will not have any direct effect on the financial statements, but still you have to comply. Why we have to comply even though they don't have direct effect on amounts and disclosures? Either we want to avoid major penalties, or if you don't comply with those laws, what will happen is you might be required to close down your business. Let us try to understand with the help of examples. Guys, I want you to give me some examples. Please give me a few examples where regarding those laws and regulations which have a direct effect on determination of amounts and disclosures in the financial statements. Can you give me a few examples? Come on, dig deeper. You will automatically come to know. You have to tell me examples of few laws and regulations which will directly have an impact on amounts and disclosures in the financial statements. Give me examples of few laws which will have a direct effect on determining amounts and disclosures in the financial statements. Companies Act. Can I say Companies Act? Why Companies Act is falling under type 1? Why? Because Companies Act will directly determine what amounts you have to show in the financial statements. Like you are preparing financial statements as per Schedule 3. Schedule 3 where it is given? Companies Act. Yes or no? So you are preparing financial statements as per Companies Act. So Companies Act is having a direct effect on the amounts and disclosures, on the amounts and presentation of financial statements. So Companies Act 2013 will fall under type 1. Why? Because it is having a direct effect on amounts and disclosures in the financial statements. Few more examples. Can I say Income Tax Act? See, Income Tax Act also will have a direct effect on determining amounts and disclosures in the financial statements. In your statement of P&L, you will create a provision for tax. You will show something called provision for tax. How do you calculate this provision for tax amount? This provision for tax amount will be calculated as per the provisions of Income Tax Act. So Income Tax Act is having a direct effect on amounts in the financial statements. So Income Tax Act also will fall under type 1. What else? Now you will say GST. Tell me something other than Tax Act. PF Act. You see PF Act. See, every employer, subject to certain conditions, if he fulfills that conditions, he is required to mandatorily contribute PF amount to his employees. For his employees, he need to pay PF expense. So that PF expense will come in your statement of P&L. Now, whatever PF expense you are showing in the statement of P&L, how that PF expense will be determined? As per the PF Act. So PF Act is having a direct effect on determination of amounts and disclosures in financial statements. Similarly, I can say Gratuity Act. Similarly, I can say Bonus Act. Why? Because whatever PF, whatever gratuity, whatever bonus you are showing in the statement of P&L, that will be calculated as per PF Act, Gratuity Act, Bonus Act. So a few examples of type 1 laws and regulations which have a direct effect on determination of amounts and disclosures in the financial statements are Companies Act, Income Tax Act, GST Act, employee payment related acts like PF Act, Gratuity Act, Bonus Act. These all will fall under type 1. Why? Because they have a direct effect on determination of amounts and disclosures in the financial statements. Clear about type 1? Now, let us give some examples for type 2. Which laws will fall under type 2? Type 2 laws contains those laws which do not have direct effect on financial statements. They are not going to directly have any impact on determination of financial statements. But still you have to comply with them. Why we have to comply with them? Why? Because if we don't comply with them, either we have to pay major penalties, or if we don't comply with those laws, even though they don't have direct effect on financial statements, if we don't comply with them, we might be required to close down our business. Can you give me a few examples? What kind of laws will fall under type 2? Which do not have direct effect on financial statements, but still compliance is required if you want to avoid penalties, or they are required, which are fundamental to continue our business. Can you give me a few examples for these laws? Assume that, for example, Child Labor Act. Child Labor Act. The Child Labor Act is a law applicable for the client company. But Child Labor Act will not have any direct impact on the financial statements. Will it have any direct impact on the financial statements? No. But if you don't comply with Child Labor Act, what will happen? Either they will impose a huge penalty on you, or you might, or sometimes they will come and seal your factory also. So Child Labor Act is an example of law or regulation which do not have direct effect on my amounts and disclosures in the financial statements. But still I have to comply with it, either if I want to avoid my penalties or if I want to continue my business. compliance with the Child Labor Act is very much important. Few more examples. Assume pollution related laws and regulations. Pollution related laws. So if you take pollution related laws, you are a manufacturing entity. So you are discharging some waste. If you don't properly treat it and if you just like that release it in the rivers, what will happen? Government regulatory authorities will come and impose a huge penalty, or sometimes they will seal your factory. So pollution related laws, they don't have any direct effect on determination of amounts and disclosures in the financial statements. But if you fail to comply with this pollution act, what will happen? Either you should pay a huge penalty, or they are very much fundamental to continue your business, or you might be required to close down your business. Let me give you one more example. If you are a restaurant industry, if I am running a restaurant industry, food related laws and regulations will be there. No, food related laws and regulations will be there. So they will have some rules like the kitchen should be air conditioned, and also chef should maintain hygiene while cooking the food. So these kind of food related laws and regulations will be there. If a restaurant does not comply with food related laws, first of all, food related laws in a restaurant, are they having any direct effect on determination of amounts and disclosures in the financial statements? The answer is no. Food related laws are not going to determine any amount, any disclosure in the financial statements. But if you are a restaurant and if you don't comply with food related laws, what will happen? Either you have to pay a huge penalty, or sometimes they will come and seal your restaurant. So these kind of laws will fall under type 2, which do not have a direct effect on determination of financial statements, but still compliance is required to avoid major penalties, or which are fundamental to continue our business. Guys, got the clarity? So we are dividing laws and regulations into two categories. For what purpose we have divided this laws and regulations into two categories? To determine auditor's responsibilities. To know what auditor is exactly required to do regarding laws and regulations, for that purpose, we divided the laws and regulations which are applicable for our client company in two different categories. What are they? Type 1 laws and regulations, type 2 laws and regulations. Come on, you should all participate along with me now. What laws and regulations will fall under type 1? Repeat everybody. Which laws will fall under type 1? Those laws and regulations which are having a direct effect on determining amounts and disclosures in the financial statements. Those laws and regulations which are directly affecting my amounts and disclosures in the financial statements, like Companies Act, Income Tax Act, GST Act, PF Act, Gratuity Act, Bonus Act. These laws will have a direct effect on my financial statements. They will fall under type 1. Type 2. Those laws and regulations which do not have any direct effect on determining amounts and disclosures. These are not going to directly affect my financial statements. Since they don't have any direct effect on financial statements, can I ignore complying with them? No. Even though they don't have direct effect on determining amounts and disclosures in the financial statements, still compliance with those laws is required. Why compliance is required? If you want to avoid major penalties, or it is fundamental to continue your business, which indirectly means that even though they don't have direct effect, if you don't comply with them, either you have to pay a huge penalty, or you might be required to close down your business. Understood? So like this, we have divided laws and regulations into two categories. For what purpose we have decided? We have divided, guys, to determine what is auditor's responsibility. See, now we have to understand where auditor will have more responsibility. Ignore what the standard is telling. I will ask you a question. You apply your common sense. As an auditor, are you expected to focus more on type 1 laws and regulations, or are you expected to focus more on type 2? Type 2 laws and regulations. Which non-compliances you can easily identify? Which between type 1 and type 2, regarding which laws auditor should be more concerned with? Where you can expect the auditor to find out the non-compliances? So simple question, apply your common sense. For auditor's responsibilities, we have divided into two categories, type 1, type 2. I am asking you one simple question regarding which laws and regulations auditor should be more concerned. Auditor should more focus where? Type 1 or type 2? It is purely common sense that so auditor has to be more concerned about those laws and regulations which have a direct effect on determining amounts and disclosures in the financial statements. Common sense, no? Between type 1 and type 2, regarding which laws auditor will be more concerned? Those that will have a direct effect on determination of amounts and disclosures in financial statements. That's what even the standard also told. See, standards are nothing but what? Common sense, guys. Common sense put in a complex language. That itself is a standard on audit. The same thing, whatever common sense point I have told you, the same thing they will try to say there. So if you come to this chart, so we have divided what are type 1 laws, what are type 2 laws. Now, when we see what will be auditor's responsibility, the standard told that regarding type 1 laws and regulations, auditor should obtain sufficient and appropriate audit evidence regarding their compliance. Regarding type 1 laws and regulations, like regarding Companies Act, regarding Income Tax Act, regarding GST Act. So these laws which have a direct effect on the financial statements, auditor should perform in-depth audit procedures and he should obtain sufficient and appropriate audit evidence whether this type 1 laws and regulations are complied with or not. Whether the type 1 laws and regulations are complied with or not, auditor should perform in-depth audit procedures, treat it like any other item of the financial statement and try to obtain sufficient and appropriate audit evidence regarding what? Regarding the compliances with the type 1. Okay, sir, you told regarding type 1 laws and regulations, auditor will be more concerned. He will perform in-depth audit procedures. He will try to obtain sufficient and appropriate audit evidence whether type 1 laws and regulations are complied with or not. Sir, then what about type 2 laws and regulations? Should the auditor completely ignore? Should the auditor completely ignore type 2 laws and regulations? No. So the standard is not asking you to perform in-depth audit procedures regarding type 2 laws. At the same time, they are not even expecting you to completely ignore it. Then what the standard has told, sir? The standard mentioned that when it comes to type 2 laws and regulations, you perform limited audit procedures. When it comes to type 2 laws and regulations, you perform limited audit procedures. You need not perform in-depth audit procedures. At the same time, you should not completely ignore it. You should perform only limited audit procedures regarding type 2 laws and regulations. Sir, what will be that limited audit procedures, sir? They have mentioned in the same standard. In essay 250 only, they have mentioned what will be that limited audit procedures. That we will talk about it later. In a short while, we will talk about what will be that limited audit procedures. But I want you to understand what standard is saying regarding auditor's responsibilities. So when it comes to type 1, since they have a direct effect on my amounts and disclosures in the financial statements, what the standard has told us, perform in-depth audit procedures, try to obtain sufficient and appropriate audit evidence and make sure that try to obtain enough of evidence that whether type 1 laws and regulations are complied with or not. Whereas when it comes to type 2 laws and regulations, since they don't have a direct effect on determination of amounts and disclosures, you are not required to perform in-depth audit procedures. At the same time, the standard is not expecting you to ignore them completely. What the standard is expecting you to do? It is expecting you to perform limited audit procedures. Sir, what will be that limited audit procedures? We will talk about it. Where these limited audit procedures are mentioned? In the same standard they have mentioned. In the same essay 250 they mentioned what are that limited audit procedures, that we will talk about it in a short while. Everybody clear till here? This chart up to this point. See, here I have mentioned something extra regarding limited audit procedures. This I will explain it later, but just focus it till here. So able to understand this chart regarding responsibility. So who is primarily responsible for preventing non-compliances and detecting non-compliances? Management. Then what about auditor's responsibilities? So for the purpose of auditor's responsibilities, type laws and regulations are divided into two categories, type 1, type 2. Regarding type 1, auditor's responsibility is to perform in-depth audit procedures and try to obtain sufficient and appropriate audit evidence. Regarding type 2 laws and regulations, auditor is required to perform only limited audit procedures. Sir, where the limited audit procedures are mentioned, sir? In the same standard they have mentioned that limited audit procedures. We will talk about it later. What will be that limited audit procedure? Clear? Comfortable, everybody? Now, let us address the next part of the standard. See, now the most important part in this standard is reporting requirements. What is the most important standard? Reporting requirements. So now what you will do is assume that you have proceeded with the audit. You identified which laws and regulations will fall under type 1, which laws and regulations will fall under type 2. You performed in-depth audit procedures here. You performed limited audit procedures here. Now you will have some observations, no? After you fulfill your responsibilities, you obtained sufficient and appropriate audit evidence regarding type 1 laws. You perform limited audit procedures regarding type 2 laws. After you are done with your respective responsibilities, you will have some observations. You will have some findings. Now, how that observations or findings will have an impact on your reporting? How the observations or findings from fulfilling your responsibilities after you have performed in-depth audit procedures and obtained sufficient and appropriate audit evidence regarding type 1 laws, and after you have performed limited audit procedures regarding type 2 laws, you will be left with some observations. You will have some findings. Now, how these findings will have an impact on my auditor's report? How these findings will impact my opinion, that is the next most important standard, next most important part from this standard. So that is what we are going to discuss after we have done our responsibilities, how it is going, how my observations are going to have an impact on my reporting requirements. Okay, so let us try to focus on reporting responsibilities. Guys, once we are done with reporting responsibilities, no, standard explanation will be over. Very simple standard, very easy standard also. Let us see what and all you are supposed to do. See, reporting with those charged with guidance, all this we'll talk about it later. What my observations will have an impact on my auditor's report. This we have to focus. What observations, depending on my observations or findings, how it will impact my auditor's report, that will be our prime focus. So let me try to put it this way. See, after I have performed all my audit procedures, after I have performed limited audit procedures, etc., I can be left with three kinds of observations. I can be left with what? Three kinds of observations. Number one, I got evidence that all the laws and regulations are complied. I got evidence that all the laws and regulations are complied with. I performed in-depth audit procedures. I performed limited audit procedures. After doing all my audit procedures, I got sufficient and appropriate audit evidence that yes, sir, all the laws and regulations the management has complied with. This is one major category. Second category of observation. I obtained sufficient and appropriate audit evidence, or let me put it this way. I performed all my responsibilities. After that, I obtained audit evidence that some laws and regulations are not complied. Some laws and regulations are not complied. This is second observation. Then the third category of observation will be, I am unable to obtain, I am, guys, no need to copy anything. I will share you the charts, whatever charts are there, that I will share it with you. Just follow the discussion. Unable to obtain audit evidence regarding compliances with laws and regulations. Listen carefully. This is the most important part in the standard. After I have fulfilled my responsibilities, I might be left with three kinds of observations. What are they? I might have found that all the laws and regulations are complied with. There is no non-compliances. All the laws and regulations have been complied. Management did not violate any law. Or second category of observation will be, I performed my audit procedures. After performing audit procedures, I found that the management did not comply with some laws and regulations. They made some violations of the laws and regulations. Third category of observation will be, I tried to fulfill my responsibilities, but I am unable to obtain evidence because of some restrictions or because of some constraints. I am unable to obtain audit evidence whether the management has complied with all the laws and regulations. That is, whether some laws are complied or not, I am unable to get my audit evidence. So these three kinds of typical scenarios will be possible. All laws and regulations are complied, or you found audit evidence that some laws and regulations are not complied, or you are unable to obtain audit evidence whether laws and regulations are complied with or not. So now let us try to understand how in each of the case my impact, the impact on the auditor's opinion will be. First, we will talk about first case. If you came to know that all the laws and regulations are complied, there is no non-compliance, what opinion you will give? Will you modify your opinion or will you give unmodified opinion? I will give here unmodified opinion. I will give here unmodified opinion. Why? Because I got to know that the client has complied with all the laws and regulations. They did not made any kind of non-compliances. Then why unnecessarily I will modify my opinion? I will give unmodified only. No. Why? Because all the laws and regulations are complied. There is no mistake. So then I will give unmodified opinion. So this first case is very simple. You need not mention it separately, but just I am explaining it in a broader way. So if you got evidence, all the laws and regulations are complied, if everything is fine, we will not give any kind of modification. Simply we will give unmodified opinion. Now let us come to the second part. See, there is nothing much left to discuss about first case. Now let us come to the second case. I performed my procedures. After performing my audit procedures, I came to know that I have obtained audit evidence that management did not comply with some laws and regulations. They violated some laws and regulations. Like they did not comply with some Factories Act, or they did not comply with some pollution laws, or they did not comply with some provisions of the Companies Act. So like that, I performed my procedures. Then I came to know that management did not comply with some laws and regulations. Now what I should do? What I should do? Directly modified? No. The standard here, it will say one more thing. When you have evidence that the management did not comply with laws and regulations, don't directly go and give modified opinion. First, we need to go and check whether adequate disclosure, guys, don't copy. I will share it with you a chart. Adequate disclosure given in financial statements, or there is no adequate disclosure, no adequate disclosure given in financial statements, that we need to check. So when you came to know that laws and regulations are not complied, you have a evidence for that. Don't directly jump to the conclusion that I will give modified opinion here. No. Before you decide on your opinion, you need to check one more thing. What is the one more thing which we need to check? Okay, laws and regulations are not complied. Did the management give that disclosure in their financial statements, or they are hiding that information from the users of the financial statements? So what is the meaning of adequate disclosure? That means assume that the management by mistake they did not comply with some pollution law, or that they have paid a penalty, and management did not hide this information. By mistake they forgot to comply with some law, or without knowledge they did not comply with some law. So management has paid some penalty. Management did not hide anything about this. In the notes to accounts, they have clearly explained we did so and so pollution related non-compliance. Government department has imposed this much penalty on us. We have paid this much amount of penalty. That penalty has also been shown in the statement of P&L clearly. Did the management hide anything here? That is what the meaning of giving adequate disclosure. So laws are not complied. Management explained it clearly. They explained in the notes to accounts what non-compliance they have done, what penalty they have paid. That penalty was also not hidden. That was also shown in the statement of P&L. So did the management commit any mistake here? The management made some non-compliance, and if they gave a disclosure properly in the financial statements, they have told everything, they did not hide anything from the shareholder. Now you tell me, in that case, if the management has clearly explained everything in the notes to account, in that case, are the financial statements misleading or they are correct only? Are the financial statements misleading in that case? No. If the management has clearly explained what non-compliance they have done, how much penalty they have paid without hiding anything, they explained everything in the notes to accounts and the financial statements. In that case, are the financial statements misleading, not misleading? In that case, financial statements are not at all misleading. Why? Because they are conveying all the information. Management did not hide anything. So if adequate disclosure is given in the financial statements, then in that case, the financial statements are giving true and fair view only. Financial statements are not misleading. Management did not hide anything. They have clearly, openly explained everything in the financial statements. In that case, will the financial statements give true and fair view? Yes. Are the financial statements misleading? No. See, if the financial statements are not misleading, which opinion you will give? Which opinion you will give? We will give here unmodified opinion only. What we will do? We will give unmodified opinion only. So if the auditor has obtained audit evidence that some laws and regulations are not complied, first he needs to go and check whether adequate disclosure is given or not given. If adequate disclosure is given in financial statements, which means management did not hide anything and they have explained about non-compliance, what consequences they have clearly explained in the financial statements. They did not hide anything from the shareholder. In that case, there is no need to modify. Why we will modify? When the financial statements are misleading, when the management is conveying wrong information, when they are hiding some information, then only you will give modified. But in the given case, they are not hiding anything. No, financial statements are showing clear picture only, so they are not misleading. You need not modify your opinion. You can go ahead and give your unmodified opinion only. Understood till here? Now let us come to the other part. In the other part, I came to obtain audit evidence that some laws and regulations are not complied, but management is not explaining them in the financial statements. They have hidden this information in the financial statements. I know there is some non-compliance. Management, what they should have done? They should have explained what non-compliance happened, what consequences are there. But management did not disclose it properly in their financial statements. That means they are trying to hide the information in financial statements. Now, if you tell me, if the management is not giving adequate disclosure, if they are hiding the information in the financial statements, in that case, are the financial statements giving true and fair view, or are they misleading? In that case, financial statements are misleading. Now what you should do? In this case, you have to give modified opinion. So if laws and regulations are not complied, and if there is no adequate disclosure given in the financial statements, then the auditor should give modified. Now I will ask one more question. Modified opinion, agreed. Which kind of modified opinion? Which modified opinion? In modified also we have three categories: qualified, adverse, disclaimer. Which kind of modified opinion will be given here? See here, modified opinion will be given, but that modification will be either qualified opinion or adverse opinion. Why? Because availability of audit evidence, no. We have audit evidence that some laws and regulations are not complied and no adequate disclosure is given. We have evidence for that. If there is evidence, and we will give either qualified or adverse. See, if the effect of the misstatement because of non-compliance, whatever effect of the misstatement is there, if it is only material and not pervasive, then we will give what? Qualified opinion. Whereas because of non-compliance, some misstatement happened and the effect of the misstatement is material and also pervasive. Material and also pervasive, then we will give adverse. Let me give you one example. Management prepared the financial statements not following Schedule 3. They did not follow Schedule 3 only. Some other format they have prepared. So Schedule 3 says you have to prepare the financial statements in vertical format. Company prepared the financial statements in horizontal format. They did not comply with some law. Here the effect is what? The entire financial statement presentation has gone wrong. That will be material and also pervasive. In that case, I will give adverse. Or assume that they made some small non-compliance for some pollution law, some small non-compliance they have done, and that non-compliance is material only. They violated some pollution law, but that is not so big enough. That is not having an entire effect on the financial statements. Some small pollution related law they have violated. Effect is material, but it is not so pervasive. So since the effect of the misstatement is material and not pervasive, in that case we will give qualified. So whatever it is, when auditor obtained audit evidence that laws and regulations are not complied, first he needs to check. See, the same thing I can explain to you in the chat here. So if you see here, this case, auditor obtains sufficient and appropriate audit evidence that there is non-compliance with the laws and regulations. First, what we need to check, there is an adequate disclosure in the financial statements or no adequate disclosure in the financial statements. If there is adequate disclosure, then the financial statements are not misleading. They are giving true and fair view only. We will give unmodified. However, if there is no adequate disclosure given in the financial statements, then depending on what will be the effect of non-compliance, we will give either qualified or adverse. See, if the effect of non-compliance is only material but not pervasive, we give qualified. If the effect of the non-compliance is material and also pervasive, we give what? Adverse. Clear, everybody? So we are done with two cases. Two cases I have successfully explained. What if laws and regulations are complied? What if laws and regulations are not complied? And you have evidence for that. Now we are left with one more category. We are left with one more possible outcome which could be possible. Let us see what is that one more possible outcome. Now the third case is, see, you tried to perform in-depth audit procedures regarding type 1 loss. You tried to perform limited audit procedures regarding type 2 loss, but you were unable to obtain sufficient and appropriate audit evidence whether some laws and regulations are complied with or not. You are unable to obtain audit evidence. Then what will happen? So I will bring it here. So in this case, what will be your reporting responsibilities? You tried to perform in-depth audit procedures regarding type 1. You tried to perform limited audit procedures regarding type 2. But you were unable to obtain audit evidence because of some restrictions or because of some conditions. You were unable to obtain audit evidence whether some laws and regulations are complied with or not. Now what you should do? So if you come across this scenario where you are unable to obtain audit evidence regarding compliances with the laws and regulations, here the standard will say you have to give modified opinion. You are unable to obtain audit evidence, no? See, since you are unable to obtain audit evidence regarding the compliances with the laws and regulations, you have to give modified opinion. See, here there is no question of checking whether adequate disclosure is given or not given. We will check whether adequate disclosure is given or not given when we have evidence. Here we ourselves doesn't know whether some laws and regulations are complied with or not. So the question itself will not arise to check the disclosure. So that's why when you are unable to obtain audit evidence regarding compliances with some laws and regulations, directly you can go ahead and give the modified opinion. But now once again my question, which kind of modified opinion? The modified also we have three categories now: qualified, adverse, disclaimer. So which opinion we should give here in case if we are unable to obtain sufficient and appropriate audit evidence regarding compliances with the laws and regulations? Which opinion? See, most of the people will say disclaimer, but you are wrong. See, whenever there is no audit evidence, disclaimer of opinion is not the only option. What option is also possible? Qualified is also possible. This is what most of the students will miss out. The moment when they read that the auditor is unable to obtain sufficient and appropriate audit evidence, they will immediately jump to the conclusion, okay, disclaimer, we will give disclaimer. No, giving disclaimer is not the only option when evidence is not available. When evidence is not available, even there is an option of qualified also. When qualified, when you are unable to obtain audit evidence regarding some law and regulation, and the possible effect of that non-compliance is only material, not pervasive. If it is only material but not pervasive, we will give what? Qualified opinion. Agreed, we are unable to obtain audit evidence regarding some law, but the possible effect of that undetected misstatement is only material but not pervasive. We will give qualified. If we are unable to obtain audit evidence and the possible effect of that non-compliance is material and also pervasive, then what we do? Then we will give a disclaimer. But as I mentioned, most of the students will commit this mistake. What they will do is, the moment whenever they read auditor is unable to obtain audit evidence, they will immediately jump to the conclusion that disclaimer will be appropriate. No. In case you are unable to obtain audit evidence, two options are feasible. Either you can give qualified opinion or you can give disclaimer. If the possible effect of non-compliance is material only but not pervasive, then we will just give qualified. If the possible effect is material and also pervasive, then we will give disclaimer. That is what there in the other part of the standard. So if you see here, auditor unable to obtain sufficient and appropriate audit evidence regarding compliances with laws. Then depending on what will be the possible effect of that undetected non-compliance, if the possible effect is only material, we will give qualified opinion. If the possible effect is material and also pervasive, we will give disclaimer of opinion. We will give what? Disclaimer of opinion. So once you are done with all your responsibilities, depending on your observations, this is how it will have an impact on your auditor's opinion. So you have to check whether all the laws and regulations are complied. If all laws and regulations are complied, well and good, no issue at all. In case if you have obtained audit evidence that some laws and regulations are not complied with, then we need to check whether adequate disclosure given or not given. If adequate disclosure is given, you can give unmodified. If adequate disclosure is not given, then you have to decide modified opinion, and which kind of modification. If you have evidence, either qualified or adverse. If you are unable to obtain sufficient and appropriate audit evidence regarding compliances, then depending on what will be the possible effect, if the possible effect is only material, give qualified. If the possible effect is material and also pervasive, give the disclaimer of opinion. Understood, everybody? So this is what auditor's responsibilities through the audit report. So if you find, depending on your observations, this is how your audit report will be impacted. Understood? So with this, almost 70% of the concept of the standard we are done. So what and all I have explained you till now? I have explained what is the responsibility of auditor, what is the responsibility of management, then what is the responsibility of auditor. For that also we have divided laws and regulations into two categories: what auditor should do regarding type 1, what auditor should do regarding type 2. Then I have explained, after you have performed all your audit procedures, whatever your findings are there, whatever your observations are there, how that will have an impact on our opinion, how we will report it through your auditor's report. So that's what I have explained. So with this, almost all 70 to 80% of the concept I have explained. Now what we will do is, remaining concept of the standard also we will try to finish it by reading the content from the standard. Okay, so concept is over, almost all entire concept is over. Now what we will do is, first we will start reading the content from the material. We will try to complete whatever content we have given in the material. We will go through it once, then once again I will come back to this flow chart. I will explain the entire standard. See, this entire standard I have summarized in 2 pages. So first we will complete the content from the material. First we will complete the content from the material, then we will come back to this flowchart once again and do one comprehensive revision of total standard. So by this you will not remember the content of the standard. The content you will always be able to remember it. You will not be forgetting the content of the standard. You will be able to always remember it. So that we will do. So now next thing what we will do is, we will try to read the material. Hope you are all able to remember whatever we have discussed till now. So much of concept we have discussed. Hope all that concept is in your minds. Okay, so shall we start reading the material? Let us do it now. So essay 250, consideration of laws and regulations in an audit of financial statements. So the title itself makes the objective very clear. This standard is going to talk about what will be the considerations, that is what will be the requirements which auditor needs to do with regard to laws and regulations while conducting an audit of the financial statements. Let us see what does the standard say. First point, they talk about primary responsibility for compliance with laws and regulations. As we have already explained while explaining the concept, it is whose primary responsibility to ensure the compliances, that is to prevent a non-compliance, and also to detect a non-compliance, that is whose primary responsibility always rests with management and those charged with governance. So that's what even they mention here. It is the primary responsibility of management along with the oversight, that means along with those charged with governance, to ensure that entities operations are conducted in accordance with provisions of laws and regulations. So the primary responsibility to make sure that entity is conducting its operations as per the laws and regulations or not, that primary responsibility always rests with management and those charged with governance. Sir, now what about responsibilities of auditor, sir? Let us see. So auditor is not responsible for preventing non-compliances, and also he cannot be expected to detect non-compliances with all laws and regulations. You can't expect the auditor definitely will not be responsible for preventing non-compliances. He cannot stop non-compliance. At the same time, you cannot expect the auditor to detect all kind of non-compliances. For the purpose of auditor's responsibility, laws and regulations are divided into two categories. What are they? Type 1, Type 2. Type 1, those laws and regulations which have a direct effect on the determination of amounts and disclosures in the financial statements. Examples: Companies Act, Income Tax Act, GST Act, PF Act. So you can keep on adding here. Next one, Type 2 laws and regulations. See, sometimes for Type 2 laws and regulations, they will alternatively use the term other laws and regulations. So like as you see here, other laws and regulations, sometimes in the examination, they will not ask you the question regarding mentioning Type 2, but instead they will say, explain what are auditor's responsibility regarding other laws and regulations. So when they use the term other laws and regulations, which laws they are referring to? They are referring to Type 2. The other name for Type 2 laws and regulations is other laws and regulations. So those other laws and regulations which do not have a direct effect on determination of amounts and disclosures in the financial statements, but still compliance with which may be either fundamental to the operating aspects of the business, that is to an entity's ability to continue the business, or to avoid material penalties. That means even though they don't have any direct effect on amounts and disclosures, but still compliance is required. Why? Because it is very fundamental for the entity's ability to continue, or if you want to avoid major penalties, you have to comply with them. And therefore, non-compliance with such laws and regulations may have material effect on the financial statements. That means straight away they are not having any direct effect. But in case if you don't comply with them, either you have to pay major penalties or you have to close down your business. Non-compliance might have a material effect. So you don't go into all this technicalities. Just remember one thing: Type 1 laws and regulations which have a direct effect on determination of amounts and disclosures. Type 2 laws and regulations which do not have any direct effect on determination of amounts and disclosures, but still the compliance is required for the entity to for it is very much important for the entity's ability to continue and also to avoid the major penalties. Next one. So we have seen for auditors' responsibilities, laws and regulations are getting divided into two categories. Now, what will be objective of the auditor? What auditor is supposed to do? As I have mentioned, when it comes to Type 1 laws and regulation, auditor is required to obtain sufficient and appropriate audit evidence. That means you need to perform in-depth audit procedures and try to obtain sufficient and appropriate audit evidence. Whereas when it comes to Type 2 laws and regulations, he needs to only, what he needs to do? He needs to only perform limited audit procedures. What are that limited audit procedures? That we will see it in the same standard. So that's what even they mention in the objectives. The objectives of the auditor are: number one, to obtain sufficient appropriate audit evidence regarding compliance with the provisions of those laws and regulations which have a direct effect on determination of amounts and disclosures. That is, whenever it comes to Type 1 laws and regulations, auditor needs to treat it as any other item of financial statement, perform in-depth audit procedures and try to obtain sufficient and appropriate audit evidence. However, to perform only specified audit procedures, or even you can say limited audit procedures, to perform only specified audit procedures to help instances of non-compliances with other laws and regulations. As I have told, sometimes they use the terms interchangeably. Other laws and regulations means Type 2 laws and regulations. that may have a material effect on the financial statements. Nothing but when it comes to type 1, you need to obtain sufficient and appropriate audit evidence. When it comes to type 2, they are not asking you to perform in-depth audit procedures and try to obtain sufficient and appropriate audit evidence. They are only asking you to perform some specified audit procedures. That means they will tell you some limited audit procedures, that specified audit procedures or limited audit procedures. If you perform, that will be more than enough. And also, whatever your report, whatever your observations are there, whatever your findings are there, that you are required to respond appropriately. You have to appropriately communicate in your auditor's report. How to communicate auditor's report? That's what I have explained in the chat previously. To respond appropriately to non-compliances or suspected non-compliances with laws and regulations identified during the audit. That means once you performed in-depth audit procedures regarding type 1, once you perform specified audit procedures regarding type 2, if you find any non-compliances, you have to respond appropriately. You have to report appropriately. How to report appropriately? That's what I have explained you in the chat. Like if you remember, as we have seen, if all the laws and regulations are complied, you will give unmodified only. If you obtained audit evidence and you came to know that laws and regulations are not complied, then we will check whether there is adequate disclosure or no adequate disclosure. When the auditor is unable to obtain audit evidence, then you have to give modified opinion. So in this manner, you have to respond appropriately. So 3 objectives. If they ask you what are the objectives of the auditor as per SA 250, what you will say? 3 objectives. When it comes to type 1 laws and regulations, perform in-depth audit procedures, try to obtain sufficient appropriate audit evidence. When it comes to type 2 laws and regulations, try to perform only specified or limited audit procedures. Number 3, whatever your findings are there, if you find any non-compliances or if you suspect any non-compliances, you have to report appropriately. How to report appropriately? That we have already covered. Next one. Sir, you are telling non-compliance. What is the meaning of non-compliance, sir? Can you define what is the meaning of the non-compliance? So now the next point talks about, sir, what is that meaning of the non-compliance? When I say non-compliance with the laws and regulations, what do I mean by that? Let's apply your common sense here. If I ask you in layman terms, how you will explain? Tell me what do you mean by non-compliance with law? What you will say? What I will say is, if something is mentioned in law, law says you to do something. Either you are not doing it, either you are not doing something which is mentioned in the law, or you are doing something which is against the law. If law told, for example, you should not drive a car without having driving license, you are not doing it. That means even without having driving license also you are driving. That is what non-compliance. So if you are doing something which is against to the law, for example, traffic rules say you have to walk on the left side of the road, but you are walking on the right side of the road. You are going against the law. You are doing something which is against the law. That we call it as what? Non-compliance. So either you are not doing something which is mentioned in the law, or you are doing something which is against the provisions of the law. That we simply call it as what? Non-compliance. That's it. That only. Even the definition also says the same thing. Act of omission, that means you are not doing something, or act of commission, you are doing something, either intentionally you are doing or unintentionally you are doing, which are contrary, which are against to the prevailing laws and regulations. Either you are not doing something or you are doing something, either intentionally you are doing it or unintentionally you are doing it, which is against to prevailing laws and regulations. That activity we call it as non-compliance. Assume that I am a person making income, making a salary more than basic exemption limit. I don't know that I have to file income tax return. I am a techie. Assume I am a IT software engineer. I am making a salary of 10 lakh rupees per annum. I don't know income tax act. I don't know income tax act. I don't know that I have to file my income tax return also. So unknowingly, unintentionally, I did not file my return. Will that be a non-compliance? Yes. Yes. Even if you unintentionally did something or did not do something which is against the law, that also will be called as what? Non-compliance. If I know I'm a chartered accountant, I know I'm making income more than basic exemption limit, intentionally I did not file my income tax return. I thought who will come and catch me? Intentionally I did not file income tax return. That is also non-compliance. See, even if you don't know the provisions of the law, unintentionally you violated the law, will the court spare you? Will the court spare you? For example, you killed a person. You don't know that there is a law which says if you kill a person, you will be liable for imprisonment. So unintentionally you killed it. You don't know that it is a non-compliance. You don't have knowledge of law, but still you killed a person. Will the judge spare you? Okay, this fellow doesn't know the law. Let him go out. We will not punish him. Will the judge spare you? No. So that's why act of omission or act of commission, either you are not doing or you are doing something which is against to prevailing laws. Either intentionally you are doing or not doing it, or unintentionally that happens. Everything will fall under non-compliance. Such acts include transactions entered into by or in the name of the entity on its behalf by those charged with governance, management, or employees. See, when I say entity made a non-compliance, what do you mean by entity making a non-compliance? Take for example, I am saying Reliance Industries Limited made a non-compliance with law. When I say this entity, Reliance Industries Limited made a non-compliance, how can an entity make a non-compliance? Reliance Industries Limited, it is a person, artificial person. Company will not go and make any non-compliance. Company is artificial person. No. When I say Reliance made a non-compliance, will the office building will go into the non-compliance? No. When I say Reliance has made a non-compliance, which means that in the name of the entity or on behalf of the entity, some of the management or some those charged with governance or some employees doing some activities in the name of the company which is against to the prevailing laws and regulations. Understood? So when I say entity made a non-compliance, entity will not go and make a non-compliance. Company is an artificial person. How it can make non-compliance? When I say company made a non-compliance, what do I mean by that is some transaction has been entered in the name of the company or on behalf of the company by its directors, management, or somebody else, some employees, which and that transaction is against to the provisions of the law. Then we call it as non-compliance made by company. And non-compliance does not include personal misconduct unrelated to the business activities of the entity by those charged with governance, management, or employees. So what do they mean? What do they mean by this point is, assume that company Reliance Industries Limited. Okay, so Reliance Industries Limited company is there. It is having team of board of directors. One day, one board of director, when he is driving the car, assume he is driving this car. Sir, how come it is a car? It is a car only. You have to imagine. So one day he is driving a car. On his way to the office, he is coming to the office. So while coming to the office, on his way, he made an accident to one person. He went and hit the car to person walking on the pedestrian. He's like a Salman Khan. So he has taken his car. He has gone and hit a person who is there on the pedestrian. So he committed an accident. Now this board of director made a misconduct, personal misconduct. He went and did an accident. So now you tell me, did this personal misconduct committed by board of director, can it be called as non-compliance made by Reliance Industries Limited? No, that's what even they are saying. If some employee, if some management, if some those charged with governance, if he has done some personal misconduct, which is not at all relating to company, which is not at all relating to business, then it can't be called as a non-compliance made by company. Or assume that there is one person. Okay, so one of the employee of assume for example Tata Motors. So this employee is misbehaving with his wife. So now what wife has done is he filed a case against that employee mentioning that he is doing domestic violence. So now this is a personal misconduct committed by employee. So whatever personal misconduct committed by employee, can I call it as non-compliance made by Tata Motors? No. So that's what even they are mentioning here. Non-compliance does not include personal misconduct unrelated to the business activities of the entity by those charged with governance, management, or employees. If they are doing some personal misconduct which has nothing to do with the business of the company, that can't be called as a non-compliance made by company. So this is how they are defining the term non-compliance. Come on guys, repeat what is the meaning of non-compliance. Definition, very important. They might ask you for as a part of the question for 2 marks. So non-compliance means act of omission or commission, either intentionally or unintentionally, which is prevailing to, which is against to, or which is contrary to prevailing laws and regulations. When I say entity made a non-compliance, how can an entity make a non-compliance? So some transactions will be entered in the name of the entity by management, employees, or those charged with governance. Does the non-compliance include personal misconduct of management, employees, or those charged with governance? No. So whatever personal misconduct done by management, employees, those charged with governance, which is not at all related to the business, that can't be called as a non-compliance made by company. Clear and comfortable everybody till here? Now, let us come to the next point. Specified audit procedures for type 2 laws and regulations. See, this is what I was mentioning. In our conceptual understanding, I told that when it comes to type 2 laws and regulations, or when it comes to other laws and regulations, other name for type 2 laws and regulations is other laws and regulations. So when it comes to type 2 laws and regulations or other laws and regulations, we need not perform in-depth audit procedures. What we should do? We should only perform specified audit procedures or limited audit procedures only we need to perform. Sir, what are those specified audit procedures, sir? So we need not break our heads regarding what will be that specified audit procedures regarding type 2 laws and regulations. They have already mentioned in the same standard. So let us see what auditor needs to do when it comes to type 2 laws and regulations. He needs to perform only specified or limited audit procedures. Where they were mentioned? In the same standard they were mentioned. Let us have a look. The auditor shall perform the following audit procedures to help identify instances of non-compliances with other laws and regulations. When I say other laws and regulations, what do I mean by that? Type 2 laws and regulations. That means to know whether there is any non-compliances with the type 2 laws and regulations, he need to perform only the following specified procedures. What are they? Number one, inquiring with the management, and where appropriate, those charged with governance as to whether the entity is in compliance with such laws and regulations. So first thing what you should do is regarding type 2 laws and regulations, go to the management and inquire with them. Ask them the question. Sir, did you comply with all the type 2 laws and regulations? Did you make any non-compliances? First go and inquire with management and those charged with governance. Number two, inspecting correspondence, if any, with relevant licensing or regulatory authorities. Inspecting correspondence means check whether any communication has been made by respective authorities. Like for example, did the company receive any notice from the pollution department? If your client is a restaurant company, did they receive any notice from the food department, FCI, FSSAI? So like that, check whether there is any correspondence, whether any communication happened from licensing or regulatory authority. In simple terms, if I have to say, whether any licensing or regulatory authority sent the notices, that we need to check. And then finally, you go and inquire entities in-house legal counsel. Should also go and inquire with whom? Entities in-house legal counsel. First of all, what do you mean by legal counsel? Legal department. In-house legal counsel means internal legal department. See, in big companies like Reliance or so-called listed companies, they will have a dedicated legal team within the company. They have some lawyers as employees who will work with the company as a team. So that we call it as in-house legal team. Internal lawyers, internal legal team will be there. Some big companies, what they will do is they will take some employees, they will take some lawyers as employees and pay them monthly salary and make them work in the company. So that we call them as in-house legal team. If there is any such in-house legal team in your client company, go and inquire with them whether any non-compliances with type 2 laws and regulations happen. That's all. If you perform these three things regarding type 2 laws and regulations, your responsibility is over. Apart from these three steps, you are not supposed to do anything extra. But this is only for what? Type 2 laws and regulations. For type 1, there is no limited audit procedures. You have to perform in-depth audit procedure, treat it like any other item of financial statement, try to obtain sufficient and appropriate audit evidence. But when it comes to type 2 laws and regulations, you are supposed to perform only these three steps. What three steps you need to perform? Inquire with management and those charged with governance. Check whether any notices have been received from licensing or regulatory authorities. See, you can also you can write it as inquiring whether any legal notices are received. Like this also you can mention. So inspecting correspondence, or even you can write inquiring whether any legal notices are received. So go and inquire with the legal and regulatory departments. Did they send any notices to my client company? Similarly, go and inquire with entities legal counsel. If there is in-house legal counsel, go and inquire with them whether there are any non-compliances with other laws and regulations. If you do these three things, that will be more than enough. But regarding type 2 laws and regulations, understood? Guys, till now what we have discussed? First we have understood who is primarily responsible. Then we understood for auditors' responsibilities, the laws and regulations are divided into two categories. What are the objectives of the auditor as per the standard? Then we understood what is the meaning of non-compliance, and also we have understood what specified audit procedures are required to be performed when it comes to type 2 laws and regulations. Comfortable everybody? Now. So now after you have performed this in-depth audit procedures or specified audit procedures, you will have some observations. No, those observations are required to be reported. And if you observe carefully here, there are three reporting requirements. Out of that, second one we are done. Reporting non-compliances in the auditor's report. When you have to modify the opinion, when you need not modify the opinion. So in case if you came to know about any non-compliances, you have to communicate, you have to report it through your auditor's report. One step we are done. But apart from that, there are even few more reporting requirements also. What are they? First, if you find any reporting non-compliance, you need to communicate with those charged with governance. Before you consider modifying the opinion and all, First, we have to go and communicate with those charged with governance. After that, if necessary, we need to mention that non-compliances in our audit report also by way of modifying the opinion in some circumstances. In addition to that, in some cases, you might be required to report non-compliances with relevant regulatory and enforcement authorities also. So in case if you find any non-compliances with the laws and regulations, three reporting requirements will be applicable. Number one, first we have to go and report the matter of non-compliance with those charged with governance. Go to those charged with governance and tell, sir, your entity has made so and so non-compliances that we have identified. That is the first step. Then even we will consider modifying the opinion. That means whatever our findings are there, that we will report in our audit report also. How to report that in the audit report? This I have already explained in the form of chart. And in some cases, you are required to report non-compliances to relevant regulatory and enforcement authorities also, like RBI in case of banks, or ROC in the case of companies. In some cases, you are required to report the non-compliance with regulatory and licensing authorities also. Let us understand each and every reporting requirement in a detailed manner. So if you find any non-compliance, first step is what? We need to report the non-compliance with those charged with governance. So if you find any non-compliance, first you have to go and communicate with the top level management. Whoever top level management in the organization is there, go to them and tell them, sir, your organization has made all these kind of non-compliances. So that's what they say here. If the auditor believes that there is a non-compliance with the laws and regulations, the auditor shall go and communicate the matter with those charged with governance with the top level management as soon as practicable. See, but here there is a catch. See, if low level employees have committed non-compliance, if you go and report it to those charged with governance, there will be purpose. If the non-compliance is committed by some low level employees, and if you go and communicate with those charged with governance, sir, your employees have made this non-compliance, then there will be purpose. What if non-compliance is made by those charged with governance only? If low level employees made a non-compliance, you go and report it to those charged with governance. Yes, some purpose will be there. But what if the top level management only made the non-compliance? Then what you will do? Then if you go and communicate with those charged with governance, will there be any purpose? No. Then what should happen? That is explained in the B point. Let us see what they are saying. If the auditor suspects that management or those charged with governance themselves are involved in the non-compliance, the auditor shall communicate the matter to next higher level of authority at the entity, if it exists. Generally it will not exist. That's why they told if it exists, such as audit committee or supervisory board. But practically speaking, audit committee itself falls in those charged with governance. In 90% of the cases, there will be no other higher level of authority than those charged with governance. So first point they say, if you find any non-compliance, we'll go and report it to those charged with governance. But now a question comes, sir, what if management or those charged with governance themselves are involved in the non-compliance? Then they are saying, find out if there is any next higher level of authority. If there is somebody else who is higher than those charged with governance, generally it will not be. If you find any, you can go and communicate with them. Sir, what if there is no higher level of authority, sir? Top level management, they are the highest level of people in the organization. They themselves did the non-compliance. There is no higher level authority to report. Then what I should do? That will be addressed in the C point, where no such higher authority exists. There is no other higher level of authority. Or if the auditor believes that communication may not be acted upon, or is unsure as to the person to whom to report, or you believe that even if I go and communicate with those charged with governance, no action will be taken, or I am confused, I don't know whom to report. See, three things are covering here. You found that those charged with governance themselves are involved in non-compliance, but you are unable to find there is no higher authority. Apart from those charged with governance, there is no higher level of people in the organization. Or you believe that even if you go and communicate, no action will be taken. It may not be acted upon. Or sometimes you fall into confusion. Boss, whom I have to report now? Those charged with governance themselves have committed fraud. I am confused now to whom to report. In these circumstances, they will tell you one simple advice: go and obtain the legal advice. Go and obtain legal advice. Go and consult a lawyer. Why? Because he will have better knowledge about laws and regulations. He will tell you what has to be done. Obtain the legal advice. Clear? So this is what the reporting requirements of non-compliances with those charged with governance. Three simple steps, guys. If you find any non-compliance, go and report it to those charged with governance. Sir, if the top level management themselves are involved in non-compliance, then what I should do, sir? Find out whether any next higher level of authority is there. Sir, no such higher authority is there. or I believe that even if I go and communicate with that higher level of authority, no action will be taken. Or I am myself confused, sir, to whom to report. Now what you should do, go and consult a lawyer. He will give you advice, follow that advice. Clear? So this is the first reporting requirement, reporting non-compliance to those charged with governance. Now, if you come to the second point, reporting non-compliance in the auditor's report. If you find any non-compliance, you need to mention that in the audit report. How? By modifying opinion. So I told you two cases. In the previous class, whatever I have explained, see, if laws and regulations are all complied, there is no need of modification. This need not be separately stated. But when you need to modify, when laws and regulations are not complied, or when you are unable to obtain sufficient and appropriate audit evidence. So I have even explained when you will give modified opinion, the same thing they have explained it in a paragraphical format. Like if we read it here, if the auditor concludes that the non-compliance, concludes means what? When I say auditor has concluded that there is a non-compliance, that means is he having evidence or not having evidence? That means he is having evidence. Sufficient and appropriate audit evidence is available. Then only I can conclude. No. If I am saying I am damn sure there is a non-compliance, when I will conclude, when I have evidence or don't have evidence? Definitely when I have an evidence. So if the auditor concludes, that means he is having sufficient and appropriate audit evidence that the non-compliance has a material effect on the financial statements and it is not adequately reflected in the financial statements, not adequately disclosed in the financial statements, then the auditor shall, in accordance with SA 705, express either a qualified opinion or adverse opinion on the financial statements. Guys, nothing here. If you see, this is what I have presented in the chart. Whatever we have read in the paragraph, the same thing I have presented in the chart and I have explained. So auditor concluded, that means auditor obtained sufficient and appropriate audit evidence. What? That the financial statement, that there is a non-compliance with the laws and regulations. See, if it is adequately disclosed, no need to give a modified opinion. If it is not properly disclosed or reflected in the financial statements, then we will modify. Which kind of modification? Either qualified or adverse. If the effect is only material, then we will give qualified. If it is material and pervasive, then we will give adverse. So whatever that is there in the paragraph, the same information I have explained here as a chart. Try to summarize it in the form of chart. So that's what even they say here. So if you read carefully, if the auditor concludes means he is having evidence and he has evidence that there is a non-compliance and it has not been adequately reflected. See, here it is implied. Now some people after reading this sentence, they will come and ask me, sir, where it is mentioned if there is adequate disclosure, you need not give modified opinion. Where it is mentioned, sir, you are saying in the chart, if there is a adequate disclosure, you can give unmodified opinion. No, sir, where it was mentioned? See, it is not expressly mentioned. It is not expressly mentioned, but it is implied from this statement. If you read this statement, from this statement, it is implied. Why? What they are saying? If the auditor concludes that non-compliance has a material effect on financial statements, and when it is not adequately reflected or presented, then only you are required to modify. Which impliedly means that if the auditor concludes there is a non-compliance, but it has been properly reflected in the financial statements, no need to give modified opinion. That statement is not expressly given, but it is implied when you read this paragraph carefully. So whatever it is, this is what the summary, the same thing I have presented it in the form of chart here. So auditor obtained evidence and there is a non-compliance. If it is adequately disclosed, no need to modify. If there is no adequate disclosure, then you have to modify. Which kind of modification? Either qualified or adverse. Now, coming to the next point, if the auditor is unable to obtain sufficient appropriate audit evidence, what? Is unable to obtain sufficient and appropriate audit evidence to evaluate whether non-compliances that may be material to the financial statements or is likely to have occurred, then the auditor shall express either a qualified opinion or a disclaimer of opinion. Simply the same thing I have explained it in the form of a chart here. So if you see it here, if auditor is unable to obtain sufficient and appropriate audit evidence regarding the compliances with the laws and regulations, then you will modify. Which kind of modification? Here in this case, either a qualified opinion or a disclaimer of opinion. If the possible effect is only material, then we will give qualified. If the possible effect is material and also pervasive, then we will give disclaimer of opinion. Understood? So whatever content we have read in the paragraphs, the same thing I have presented it in an easy manner in the form of the charts. Now there is one more reporting requirement also. In some cases, reporting to those charged with governance and reporting in the auditor's report alone will not be enough. we might be even required to go and communicate with some regulatory authority like ROC, RBI, these kind of regulatory authorities. So let us see what they are saying. If the auditor has identified or suspects non-compliance with laws and regulations, the auditor shall determine whether the auditor has a responsibility to report to that identified or suspected non-compliances to parties outside of the entity. See, this requirement will not be there always. It depends on the audit which you are doing. Like for example, if you are doing bank audit, in case of bank audit, Banking Regulation Act clearly says that if you find any non-compliances in the case of audit of a bank, you have to go and report it with the RBI. Then in that case, just reporting with those charged with governance and giving a modified in the auditor's report alone will not be enough. We have to even go and communicate this matter with whom? With the RBI also we have to go and communicate. So depending on circumstances of each and every audit, the auditor should analyze once, is there any responsibility on him to communicate this non-compliance with respective authorities, respective regulatory and enforcing authorities. That means licensing or regulatory authorities. Some regulatory authorities will be there, no? So examples of regulatory authority, as I mentioned, RBI, ROC, these kind of authorities, sometimes there will be reporting requirements on the auditor's head to go and communicate with them. If such requirement is there, you have to go and communicate with that licensing or regulatory and enforcement authorities also. So this is what 3 reporting requirements will be there for the auditor. What are they, guys? So if you find any non-compliances, first you have to go and report with those charged with governance. Sir, what if top level management themselves are involved in non-compliance? Determine whether any next higher level of authority exists. If it does not exist, or you know that, or you believe that even if you go and communicate, no action will be taken, or you are confused whom to report, then what the standard simply says, go and get the legal advice. After that, you have to report that non-compliance in your audit report. In some cases, you have to modify that also, we have seen when. And in some extra cases, we need to go and report with the regulatory or enforcing authorities also if any such requirement is there on the auditor. Clear? So this is what regarding reporting requirements. Then we have one more last part of the standard, indications of non-compliances with the laws and regulations. Now, SA 250 is trying to help out the auditor by listing out some events or circumstances which will give the hint to the auditor that there could be a non-compliance. What SA 250 is doing? It is trying to help out the auditor. How it is trying to help out the auditor? It is identifying a few events or circumstances, and they are telling you few events or circumstances. If you come across those events or circumstances, then you should get a indication, you should get a hint that there could be a non-compliance. However, you should not be of a wrong notion that the moment you come across this indication, compulsorily there will be a non-compliance. No, I did not say that. I did not say that. Just what the standard is saying. If you come across whatever some examples of the circumstances they have given here, if you come across any of these events or circumstances, then there is a hint that there could be non-compliance. Whether actually non-compliance is there or not, that you need to perform audit procedures and find it out. Okay, so these circumstances only give you what? Hint. That doesn't mean the moment you come across these circumstances, compulsorily there will be a non-compliance. No, I did not mean it. They will just give a hint. There could be a possibility of non-compliance. You should become overcautious, perform procedures, and find out whether really non-compliance happened or not. Sir, what kind of indications they have given? Very simple, guys. In the current financial year, some regulatory authority came and did the investigation. When the regulatory authorities will come and do investigation, when they suspect any non-compliance only or not. If you find that in the current year some regulatory authority came and did the inspection, should you get doubt regarding non-compliance or not? Obviously no. Or you are able to find in the books of accounts the company made the company made payment of so much penalties. Why the company will make penalties when they made non-compliance? This also should give you a hint or not. So like this, they have identified a few circumstances which will give a hint to the auditor that there could be a non-compliance. What are they? Investigations by regulatory organizations, government departments, or payment of fines or penalties. You are able to see that in the recent times some regulatory organization came and did the investigation, or your client is making huge amount of payment of penalties. This is a clear indication that your client might have made non-compliance. Or payment for unspecified services or loans to consultants, related parties, employees, government employees. If you find that without mentioning any purpose, your client is giving money to related parties, that will be a violation of Companies Act. They might have violated provisions of Companies Act. Why? Because giving loans to related parties you can't do in whatever manner we want. Even we have seen it in Caro also. If you find any huge amount of loans given to related party, there could be an indication they might have complied with, they might have not complied with Companies Act. Or if you find any unspecified loans given to government employees, You are making payment to government employees without any purpose. That is not a payment, guys. That is a bribe actually. So when you find that your client is making payment to government employees or your own employees or related parties without mentioning any specific purpose, that might be a bribe. That is an indication that your client is violating laws and regulations. Next one, purchasing at prices significantly above or below the market price. See, this is particularly possible in case of those products which are under control of government. Take for example, you are required to buy coal. You are required to buy coal. Your client company is using some purpose of the coal. They have to buy the coal. They have to buy the coal from government. When all the competitors are able to buy the coal at 100 rupees per kg, but your client company is able to manage and purchase the coal at 80 rupees only. All your competitors are paying 100, but your client company is able to procure it at 80 rupees only. Might be they have bribed someone there. So when you find that your client company is buying the products at above market price or very much below the market price, that is also an indication they might have done some non-compliances. They might have bribed someone. Unusual payments in cash or bearer checks. You are able to find huge amount of cash payments, huge amount of bearer checks. For example, if you are making more than 10,000 rupees of cash payment, Income Tax Act will disallow that payment, will disallow that expense. And generally, to the extent possible, companies want to reduce cash payments. Why? Because whenever there is a cash payment, huge amount of frauds will happen. So to the extent possible, company will try to reduce its cash transactions, but still you are able to find in your client company huge amount of cash payments happening. That itself should give you an indication they might be trying to do some non-compliance. Or unusual payment towards legal and retainership fees. Your client is making huge payment of fees for lawyers, or your client is paying huge payment of fees for retainership. Sir, what do you mean by retainership? See, retainership means some big companies. For example, there is one Nestle case. There was some case going on against Nestle regarding Maggie. Maggie contains some non-edible content. So when someone filed a case against a company that Maggie contains a non-edible content, it contains some lead content. See, handling this case for the company is not only financial matter. It is a prestige issue for Nestle. It is a what? Prestige issue. So why? Because this will bring a bad name for the entire company. If it was proven that Maggie really contains some non-edible content, not just Maggie will get a bad image, entire Nestle products will get a bad image. So when companies face some legal issues, recently Adani also, someone has made a claims against Adani. So when someone files a case against a company, that fighting of the case is a prestige issue, especially for listed companies. So listed companies don't want to compromise. They always want reputed lawyers to fight the case. They always want reputed lawyers to fight the case. See, in India, we have some reputed lawyers where there will be assurance that if that person takes up the case, he will definitely win the case. So listed companies don't want to compromise. They want only reputed lawyers to take up the cases. But when I say a lawyer is very much reputed, he will not be free like you and me. Will not be free like you and me. Assume that in future someone files a case against Adani. Now the reputed lawyer is Mr. A. He's a reputed advocate. If he fights the case, he will definitely win. So such a lawyer is there. Adani wants this person to fight the case. But when I say this person is very reputed lawyer, he might be available, he might not be available. Assume he's already occupied with other cases. Now he will say no to Adani. He will say, no, sir, I'm already occupied. I will not fight your case. That will be a prestige issue for Adani, no? That's why what these big companies will do is they will go to reputed lawyers and make agreement with them. Sir, this year I will pay you 20 lakh rupees. This year I will pay you 20 lakh rupees. Why I am paying you 20 lakh rupees? I am retaining you. I am reserving you for 1 year. In this 1 year, if any case gets filed, you have to accept my case. For retaining you for 1 year, I will pay you 20 lakh rupees. Not fighting the case, guys. Just I am reserving the lawyer. Adani goes to the lawyer and say, sir, I will reserve you for 1 year. In the coming 1 year, if anybody files a case against me, you only have to fight the case. You should not say no. For that, I will give you 20 lakh rupees. And if at all, if anyone comes and files the case, for fighting the case, another charge will be given. This 20 lakhs is only for reserving him for 1 year so that he will not say no to us. In case if he agreed to fight the case, if by mistake, if someone filed the case, he will come and fight for me. No, for that he will anyhow charge fighting charges separately. So that's what the power of your interpretation, guys. See, every lawyer will read the same law, but he can interpret it in the favor of the client. He gets the most reputation. So like this, some companies, what they will do is they will pay some retainership fees to retain the lawyers. you are able to see huge payment towards legal and retainership fees. Last year legal fees was 1 lakh. Current year legal fees was 10 lakh. Or current year retainership fees was 10 lakhs. What does that indicate? If the client is making huge payment of legal fees or they are retaining more number of lawyers, what does that mean? They themselves are expecting non-compliance. That also should give a hint to the auditor. Okay, here there could be possible non-compliance. That's why they have made huge legal fees. That's why they have made a payment of huge retainership fees. That itself is an indication. Similarly, unusual transactions with the companies registered in tax 7. Tax 7 I have already explained. When you came to know that your client is having in the fraud and responsibilities, I have explained what is tax 7, Mauritius. So when you came to know that your client company is having a transaction with tax sevens, that is an indication that they might commit a non-compliance with taxation laws. Next one, payments without proper exchange control documentation. That means you are making payments, but there are no supporting documents. That is also an indication. Or unauthorized transactions or improperly recorded transactions. You are able to see in the books of accounts so many unauthorized transactions, improperly recorded transactions. That also might be an indication they might have done some non-compliance. And also adverse media comment. Some bad news is circulating about the company in the media. So that is, see, generally whenever there is something wrong, then only bad news will come in the media. So when you find any adverse media comment, bad media comment against your client company, that is an indication that there could be non-compliance. Yes, once again I am repeating, if you come across any of these circumstances, that is just giving you an indication that there is a possibility. It is not a guarantee that if you come across any of these circumstances, you should not automatically make a statement, okay, this thing happened, compulsory non-compliance. Will you make that conclusion? No. These circumstances only will give you what? Hint. There could be a non-compliance so that you can become cautious and do the audit carefully. Clear? That's all, guys. This is what the simple standard SA 250 talking about auditors consideration of laws and regulations while conducting audit of financial statements. So simple, no? So what and all we have covered in the standard? First, we have understood what is the who is primarily responsible, what is auditor's responsibility, what is objective of the auditor, meaning of non-compliance, reporting requirements, indicators of non-compliance. So whatever we have studied in this entire chart, that's what I tried to summarize here in the form of 2 simple pages. Entire discussion, whatever we had in the standard, everything has been summarized in the form of these 2 pages. If you carefully, thoroughly go through this chart, you would have prepared for the entire standard. Just in few minutes, you can complete the revision and understanding. See here, see the chart. So first part of the chart talks about responsibility. So they are explaining who is primarily, what is management responsibility, what is auditor's responsibility. For auditor's responsibility, we divided laws and regulations into 2 categories. Then we have even mentioned here who is responsible for what. So type 1, when it comes to type 1, auditor is responsible to obtain sufficient and appropriate audit evidence. When it comes to type 2, auditor should perform only limited audit procedures or specified audit procedures. What are that specified audit procedures? You have to do inquiry with 3 people. Inquire with management and those charged with governance, inquire with licensing and regulatory authority, even inquire with in-house legal counsel. That's all. Now, what is the meaning of non-compliance? That also I have summarized. Then what are indicators of non-compliance? Just now we have read the last paragraph, no? That all indicators also have summarized here. Then what are reporting requirements? If you see here, 3 reporting requirements. Number 1, reporting with those charged with governance, reporting through the auditor's report, along with that, reporting the matter of non-compliance with regulatory and enforcement authorities. That's what I tried to explain it in a detailed manner. Now you tell me how much time you need to prepare for this standard. If you ask me personally, just a span of, if you refer this chart, in a span of 15 minutes, you can understand the concept. Even you can memorize the entire standard also. Clear? So like this, I have the charts available for all the standards, whatever 10 standards we are going to discuss. For everything, I have prepared a summary. You just listen to the classes, then follow this summary. No one is going to stop you from remembering the content of standards. Okay, you will fetch full marks from the standards, but just you have to pay proper attention while listening to the classes. Clear? So that's all for this session, guys. We'll see you again in the next class. Bye everybody, take care. In the next class, what we will do is we'll try to see how the questions will be asked from this particular standard. It is very much important for us to know how the questions will be tested. It is not just enough to understand the content from the standard. We should also become familiar how the questions will be tested. So to make you familiar with questions that will be tested, I have given test your knowledge questions also. So why to postpone it to the next class? Let us do it now only. Since the concept is still there in your mind, you all will become familiar how the question will be tested. See, one common question which most of the students will have, sir, how the questions will be tested from standard, sir? Will they ask me to write the entire contents of essay 250? No. See, what they will do is they will take one particular paragraph, pose a scenario based question, and then they ask you then they frame it as a question. So to make you familiar how the questions will be tested in the examination from standards, the entire purpose of the test your knowledge questions is that only. So these are all for your practice. Let us see how the questions will be tested. If we start reading, we will automatically get familiar. The auditor is expected to obtain sufficient and appropriate audit evidence regarding compliance of all laws and regulations applicable to the entity. Do you agree with this statement? The statement which they are saying is the auditor is required to obtain sufficient and appropriate audit evidence regarding all laws and regulations. Do you agree? No. Why? Because SA 250 says you are required to obtain sufficient and appropriate audit evidence only regarding those laws and regulations which have a direct effect on determination of amounts and disclosures in the financial statements. Type 1. For type 2, you need not obtain sufficient and appropriate audit evidence. You need to perform specified audit procedures only. So that's why the given statement will be incorrect. The same statement, whatever I have mentioned, that only they will explain it in the answer also. So that's what they say. The auditor is expected to obtain sufficient and appropriate audit evidence regarding those laws and regulations that have a direct effect on determination of amounts and disclosures in the financial statements. That is, they are referring to type 1 laws and regulations. Next, it is the responsibility of the auditor to ensure that entities' operations are conducted in accordance with the provisions of the laws and regulations, including compliance with the provisions of laws and regulations that determine the amounts and disclosures in the financial statements. Do you agree with this statement? They are saying auditor is responsible for complying with laws. Do you think auditor is responsible for complying with laws? No. Who is responsible? The management and those charged with governance. They are primarily responsible to ensure that entities' operations are conducted in accordance with the laws. Not auditor's responsibility. It is whose responsibility? Management's responsibility. So the given statement is incorrect. If you replace the word auditor with management, then the given statement will be true. Next, Mr. Ronnie, a practicing chartered accountant, has been appointed as auditor of Arnold Limited. One of the engagement team member is not clear about his responsibilities regarding the compliances with laws and regulations. Advise the engagement team member regarding responsibilities of auditor regarding laws and regulations. So this is how question will be tested. So they are giving a scenario. Some practicing chartered accountant is there. He is appointed as auditor of some company. One of the engagement team member is having a doubt. What will be auditor's responsibility regarding laws and regulations? They are asking you to write what will be that responsibilities of the auditor regarding laws and regulations. Which paragraph from the standard you will write? See, you are supposed to write here B point as well as C point. First you have to explain what is type 1, what is type 2. Then paragraph C also you have to write. Why? Because actual responsibilities are mentioned in paragraph C only. For type 1, you need to obtain sufficient and appropriate audit evidence. For type 2, you need to perform specified audit procedures, and whatever your reporting requirements are there, you have to respond appropriately. But what is type 1 and what is type 2? That is explained in B point. So you have to write B point as well as C point. Understood how the question will be tested? So indirectly what they are asking you to write through this scenario based question is they are asking you to explain what will be the responsibilities of the auditor relating to laws and regulations while conducting an audit of financial statements. Just write about type 1, type 2, write the auditor's responsibilities regarding type 1, type 2. That's it. B and C paragraphs if you write, that will be enough. Next one. Auditor is not required to obtain sufficient and appropriate audit evidence regarding compliance of laws and regulations. He is required to perform only specified audit procedures regarding other laws and regulations. We already know it. Other laws and regulations means type 2. Regarding type 2, he need to perform only limited audit procedures or specified audit procedures. Explain what are those specified audit procedures. They are asking what limited audit procedures or specified audit procedures you will perform regarding type 2. Which paragraph you will write here? See this paragraph, E paragraph you will write here. So there are 3 specified audit procedures. No, if you write this paragraph, that will be more than enough. Next one. Mr. Pradeep, a practicing chartered accountant, appointed as auditor of Apple Limited. Mr. Pradeep is confused about the reporting requirements regarding the non-compliances with laws and regulations. Advise Mr. Pradeep regarding the reporting requirements of non-compliance with laws and regulations. Now they are asking you reporting requirements. All the 3 points you have to write. Reporting with those charged with governance. Reporting that non-compliances in your audit report. Regulatory and enforcement authorities. Regulatory and enforcement authorities also are required to report. So point F, if you refer, all the point F will contain reporting requirements of the auditor regarding non-compliances. That entire paragraph number, if you are supposed to write, that will fetch you full marks. Clear? So this is how the questions will be tested from standards. The more we start reading remaining standards and the more we solve the test your knowledge questions, you will automatically become familiar how to answer the questions from standards on audit and how the questions will be framed. Hope this session you are able to enjoy and understand the concept of the standards. We'll see you again in the next class with a new standard. So that's all for now, guys. See you again in the next class. Bye. Take care, everybody.